Hey, good morning, everybody. Welcome to our Morning Vol Report. It is Andrew Giovinazzi on this first day of May, 2017. I'm the Chief Operating Officer of OptionPit.com. Two things: our Condor Intensive course for Saturday, 3.5 hours. And you will learn what's going on with iron condors, how to make them work. To give you here's a preview if you like the training. This is or want to see what it would be like. Obviously, we get more in depth in the course, but this gives you an idea about them. Mark had a free course here, so just go to optionpit.com/events and check it out. Also, for all OptionPit members, I think we still have a little room left in our Trader Summit in Chicago. So anybody OptionPit member that wants to come, we have live speakers on VIX and the Vol products, M&A, finding edge in option trades, trading the FDA pipeline, and understanding basically accelerated decay strategies for the weekly options. That's what we have. There'll be mock trading where the classes are in the CBOE building in a conference room above the trading floor, such as the trading floor is now. And with that, let's get to, well, we start off with a little bit of an opening. Tech continues to lead. The earnings there are by far the best so far of just about anything that we've seen. The bank earnings were okay, but they had already made a massive run. I think the Qs are also on a way to making a massive run. Amazon, I guess, we're going to start pricing that $1,000 strategies, just because it's one of those things now where you remember it's like Apple with $700, about 4 years ago or something like that. It seems like it needs to get there. The question is when. Volatility for all of these things are very, very low. We've got Apple earnings coming out. We'll take a look in our chat room as well. But for the most part, the momentum is with the Q stocks. We have Facebook coming out. They didn't like the Microsoft earnings a lot. Didn't do much. But again, it's another stock that had a big run. Google was up last week. So it wasn't enough to carry the SPX to all-time highs, though. I think part of the problem is just oil has sort of slowed down. The banks have slowed down. But it wasn't enough to carry us over 2,400. I thought there was a good shot at that, but it just didn't happen. As far as, another thing too, some of the kind of larger dividend-paying stocks, there's a little bit of a lag there. Remember Verizon, AT&T, just nothing fantastic out of them. From a vol point of view, VIX after the weekend is not doing very much. I think we had a little bit of we ended up the day on Friday pretty much flattish after a bit of a markup. And we'll see, here's our 2-day chart. They took it up into the weekend, and now I think, again, we have that same issue. We've got one more French election, which is enough to kind of upend the term structure a little bit. My sense is that volatility for this week is kind of dead. We'll look at a couple of strategies if we can. I don't see it surviving. It's already at 7%. I think we're kind of pinned around here. We've got good earnings. Most of the big stocks have come out, I think, save for Facebook. But the reality is it's not enough to drive the S&P 500 higher, and it's certainly not enough to drive the S&P 500 lower at this point. So we'll just wait and see. But I see a lot more sideways action, and it's May 1st, but it feels like we're setting in for the summer already. The last thing we'll look at is just a little bit of, so the May ordinary future is now in the 12 handle. Again, this is about as cheap as it can get until it just starts decaying. We just need time to go by for it to get cheaper. September, October, all as low as I can remember them. I think these are lows. The June is below 13. So the fun we used to have with the vol products, and there's a lot of contango, there's a lot of decay. The market seems to be giving us a head start, meaning they've already compressed volatility low enough that some of the trades you're able to feast on at the beginning of the year just are a lot less appetizing at this point. And it looks like just trying to find the cheapest ways to get long at this point. That's what it looks like. The next part is protection in VIX. So strategies where you're kind of long delta in individual equities and just long VIX call spreads or something. I mean, these are as cheap as you will ever get for upside protection. I mean, you can buy the June 12-18 call spread for $1. That gives you a huge upside. You should be able to find some sort of performing long with that. So that's what it looks like. And again, we'll take a look at some stocks that are performing in our chat room. Also, stocks the market kind of hated a little bit, and see if there's a shot that they come out of the basement. But we're getting really nothing else from banks. Tech is leading, and that's kind of the story. So might as well stick where the story is. All right, everybody. I will see some of you in our chat room and through our schedule for this week, and we will talk to you later.